This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. So, I've been having a good old stare at the charts, and obviously it's looking a little bit tired still, and the same analysis applies over the last few days. I would be looking for us in the short term to effectively sweep these lows, the summer lows as we did a couple of days ago, and then find our way up into the, maybe up to the mid 30,000s. Find it unrealistic at this stage to imagine we break outside of this consolidation trend line, to which we have been below for, we're looking at this on a daily, but going back since April, since we started the second phase of downtrend. And but with all of that said, I do think that we are going to sweep a major low, whether it's between this month and next month or shortly after, where we come down to the mid to low 20,000s, and this isn't a guarantee, but if we were to do that, this is going to be the best opportunity to buy with a larger amount of capital. So obviously I've been incrementally buying back on the way down. This next low, if we were to sweep it, and I'm going to show you the areas of confluence on a variety of different time frames, if we do sweep it, it would be the biggest buy. So I did consider having a buy order in at 24,000. I think at this stage what I'd rather do is consolidate the amount that I was going to put in at 24 and put it all in on what could be a significant low form. So first we'll start by looking at this, the logarithmic chart on the weekly that goes back several, well, almost a decade basically, showing that we've held so far through one bear market, two bear market, a huge black swan event, and currently coming down to test it once again. Now obviously we can see that there has been incidents where we come down a little bit below it, and obviously quite a significant amount down below it here. This would represent what I would consider to be like a fair price for Bitcoin. So we talked about that a few days ago. So if you're looking to get a reasonable bang for your buck, I suppose this trend line suggests that that's an okay position. It's not the absolute low, but it's a reasonable low for what would be a continuation of this logarithmic chart, just moving on the constantly going up over years basically. So we're looking for this is an investment style chart really, because we are looking at it on a 10-year time frame here. And so with that in mind, we're not looking to get rich immediately. You're looking to put your money into something which will appreciate over time to a relatively decent extent, to be honest with you, a relatively decent extent. So this would represent the fair value, but it doesn't necessarily mean that we can't come down lower. Now obviously at the moment sentiment is pretty low. Nobody wants anything to do with crypto, and you're getting all the people coming out the woodwork again, like you do on a cyclical basis, saying crypto's a scam, everything's a scam, stay away from it, oh my god, it's terrible, it's dead, it's never coming back, which is completely unrealistic. Like I say, if you've been around crypto market for a while, you've heard it all before. These are usually the people that have been in for a short period of time, probably buying close to, if not the tops, and it feels like a scam to them because all they've ever done is lose money. They've not obviously been in the market for long enough to see substantial gains over a prolonged period of time. No, but not just with Bitcoin, but with all altcoins. Some altcoins, some of them will never recover, but some of them obviously will go on to make significant gains. But the general rule is focus on Bitcoin, only Bitcoin, and then through that we can trade into altcoins and make the most out of the crypto market. So yeah, overall, of course, no one can deny it. We're down significantly from the top, not just for Bitcoin, but for all markets, traditional markets. We were looking at even just some of these top tech stocks. They're down significantly, massively. Wrecked City, worse than Bitcoin, obviously. And if you put it in that perspective, we've not even revisited these lows around here, and why should we at this stage? And this is your March COVID dump, basically. That was your pre-pandemic high. This is your pandemic low. We're far away from this. I find it quite unrealistic to imagine that we'll come down to there. But if you have a look at stocks on the Nasdaq, then you'll see that many of those stocks have actually already not just come back down to these particular levels, but actually surpassed the lows and continuing on. So when people talk about oh, Bitcoin is not the the store of value, but it kind of, come on, let's face it, kind of is really. It just all depends on your entry point. And even Matt Damon, who bought around here, will definitely agree somewhere down the line that it is a store of value. You're just not able to see the bigger picture, and that's something that I think most people just are unable to do. People, I suppose it's a generational thing. I mean, people just can't. They've got the attention span of a goldfish, and really just cannot see the projection and the reasons for it, and they can't even recognise how it is performing in comparison to stocks, which is way better. Yeah, you could measure from the top down, and it would be as much as some stocks. It would be more than major indices, but there are certain stocks that have already plummeted way faster and deeper than Bitcoin. So we're talking about projection and a continuation up. We are doing that, and again, this is an up only chart, and some people don't they take offense to that, but effectively what you see here is an up only chart, like a major index. Anyway, so this represents the fair value, but obviously we have seen that we have on occasion, not very often, but on occasion, wick lower, and we did wick a little bit lower than this. So what I'm suggesting is we go to these, I suppose a closer view of time frames, and we're looking for what could be the next major significant low, and why that would mark off a specific low. So we'll start with a monthly. Okay, so the monthly gives us a 50 exponential moving average down here at around about 23,000, and a 50 simple moving average of around 21,000. Right, so this all down here is a major area, not just because it's a major area based on exponential and simple moving averages, but it also mimics effectively just above the absolute peak of the last bull run. Now there's always that prophecy, isn't it, which is that Bitcoin, when in a bear market, it must come down to its previous bull market top. Well, that's not the case. That's not the case. And even if it were to, I'm pretty confident that the buyers are going to step in to a large extent and front run that target. And that would lead us to around about these zones. So we're talking about 50 exponential, 23, 50 simple, currently at 21. And again, these are monthly. And guess what? They're uptrending. They're going up as each month ticks. So there we have two areas of major significance, all floating above the $20,000 zone by what would that be? Let's just measure it out at the moment. So we're 7% above if we're talking simple moving averages. We are 16% above if we're talking about exponential moving averages, and that's just this month. They will be higher next month, obviously, because the price action is still above them. Nothing particularly interesting outside of that, though, as oscillators continue to move down quite dramatically and sharply. We don't really entertain the idea of any of this being able to form divergence on such a large term time frame. And crypto, obviously we can see that we do have negative crosses and histograms continue to tick. We would need a period of accumulation before these start to stabilize, and again, we're not looking for a V-shaped recovery out of this, but we are looking to navigate our way through the next specific low being the major low, if not the absolute low. So that again, we're not really able to create divergences on something as volatile and as fast moving as Bitcoin. You would look for divergences on monthly time frames for other things, sort of major precious metals and slow moving stocks with decades worth of history. So let's move to the weekly, see what we see here. So on the weekly, we do have one interesting read only currently, which is your money flow index, currently forming some bullish divergence. Now, the money flow index it's not great at spotting lows just from being oversold. That's not the way to do it, but you can measure divergences. And at the moment, it is quite a pronounced divergence, and we could continue with this divergence if we were to find a new low. I would expect that. So this isn't exactly something that you'd measure to bounce from right now, but provided we don't make a new low on the weekly, which would be pretty significant if we were to, on the next low, it would still print a divergence on the weekly. Again, everything else, nothing particularly interesting. There's no divergences taking place here on RSI or MACD, but we do have what would be seen as a particularly interesting red volume candle here, which doesn't match with a new low on the volume indicator being a money flow index. So divergence is still in play despite this huge capitulative style wick and volume signature there. So again, there is argument to suggest that with this divergence building already, the low could already be in. But if we were to go down once again and remain higher on the money flow index on the weekly, it would certainly be a great opportunity, if not the opportunity, to really pounce on. And let's have a look at these lows based on moving averages. So we've got a 200 simple moving average around 21, almost 22, and an exponential around 25, and the medium zone being around 24. Similar to what we saw there on the 50 exponential and simple on the monthly. So we've got confluence between time frames plus divergence on the weekly. So interesting stuff to look at there, worth thinking about. Now let's move it up one more time frame to the 3-day, right? Which isn't something I'd often look at, but we do look at it from time to time. Now what we see here is a death cross for simple moving averages, which would work better, I suppose, on a longer term time frame than exponentials. Considering we've been basically sideways for over a year, it's managed to find its way to get a death cross. Now, death crosses are usually marking close to the end of what I would consider to be a trend of this size. But because the trend is still facing down and getting rejected on all moving averages of significance, and now we've got our death cross on this 3-day, it doesn't bode well for it to sort of bounce or anything like that, or go into an uptrend. It would suggest probably further downside, marking a particular interesting low. Now, if we also look over here on our money flow index and RSI, what we see is the money flow index pretty much the lowest it's ever been on a 3-daily. The lowest it's ever been, lower than the 50% correction, or the end of the bear market, basically the ultimate low that was marked in 2018. So this marked the absolute low. Now again, money flow index is to be used simply by being oversold is not a good way to do it, although this one did pretty much catch that. We got a massively oversold wick or oscillator over here, suggesting the absolute low, or more or less the absolute low, within it was within a 10% range of the end of this bear market. Now this was long drawn out bubble pop situation. This is very much in correlation with traditional markets and the Federal Reserve monetary policy, quantitative tightening, raising of rates, all of that. Everything's moving together, including Bitcoin. So we understand that. We talk about that all the time. But based on the chart alone, it's getting to some serious lows at this point now, lows which could effectively be marked off as significant lows, and potentially the opportunity. And again, we've come in at a brand new low on the money flow index here, marking the lowest it's ever been on a 3-day, at the same time as being at the fair value. So again, risk to reward. You think about this in a realistic, with a realistic mind. Taking away any kind of emotion and thinking about the projection. We are reaching some significantly oversold. I hate the word or hate the term, but it is what it is. It's significantly oversold areas on this chart, at the same time as coming up with a multi-year, multi-cycle trend line of significance. And again, it doesn't mark the absolute low on here. We have seen occasions where we come down lower and little wicks lower than this, and I say little being potentially 20 or more percent, 20-30% more wicks. We can see that, but it still marks what would be considered a fair price. Now obviously people who are emotionally charged and living in the goldfish bowl won't be able to accept that, or recognize that this is a realistic entry point and one worthy of taking part of, which is why I've been buying all the way down, and especially the last area I bought was 27,000, and I would be happy, obviously more than happy, to buy back lower with larger amounts, because it would be below what would be considered the fair value, plus those oversold reads and divergences on the money flow index. So it's looking pretty interesting so far, and I would make the case that for Bitcoin specifically, outside of stocks, that obviously it turns around pretty fast when it does do that. We would be looking to risk what could be maybe 20-30% to, well, I mean, the gains as we've seen throughout that chart are pretty significant, and that's just for Bitcoin. I would put all your focus on Bitcoin and not really think about altcoins, but you can see what I mean. You're talking risk to reward. You're thinking about, okay, we're buying into something with a potential downside of this amount compared to a potential upside of this amount, and obviously if the reward outweighs the risk, then it's definitely something you should consider. Again, I'm not your financial advisor, but you see where I'm coming from. So we are looking for a further downside on this one to sweep the lows. Obviously, a 3-day chart at the moment being below all major moving averages as well. So there's nothing really potentially to mark off on this one outside of what we've seen on the weekly and on the monthly, which more or less have that confluence of, we'll call it the lowest would be around 21,500 to the highest being around 25,000. So there you go. But yeah, we are looking for a new low to be swept, and we would expect that in order to create the divergence that we need to give us, I suppose, a bit more of a green light that things are looking to turn around. But I don't think they'll turn around fast. Throughout this economic crisis which is going on at the moment, it's going to be difficult for anything to turn around fast, unless of course something magical happens to the economy, but it doesn't appear that that's going to be the case. I don't particularly believe in magic. I've never been a fan of Harry Potter, despite it being a national treasure. So yeah, that's one thing we're looking at. And again, having an oversold money flow index isn't a signal, but being down at these low levels allows for divergences to take place. Same with the RSI. So oversold doesn't necessarily mean anything, but it's a building block for new lows to be swept and divergences to be formed, as we've seen already on the weekly. So there you go. On the 3 daily, there is signs of further downside, but divergence to be formed, which is something we're looking for on the weekly. Now on the daily, we're neither here nor there. In such a choppy bearish range, you're not really going to get any kind of signals out of this. Obviously, being below all major moving averages, you could consider the daily to be a short-term time frame indicator, time frame, which is kind of what it is. My bread and butter is basically built on dailies, and the lowest I would ever go would be a 4-hourly, but it's very rare. Most of the time I'm looking at charts on dailies and weeklies, because my projection is obviously for the bigger gains over longer periods of time, and this is why I feel as though this video, specifically this one that I'm making now, is probably one of the more interesting and one that should hopefully be thought about realistically and outside of what's going to take place by the time you finish this video, or after you've had your lunch and you look at the chart and go, well, it's not going up to. No, we're talking about a much longer term time frame here, and we're talking about fair value. We're talking about buying something with much bigger gains down the line than losses in the short term. And again, with the daily looking this way, it doesn't look particularly interesting. And again, just like I said yesterday and the day before, my expectations in the short term is that we sweep the lows, move up into areas of significance, and then get rejected, and then make a new low, at some point between this month and next month. And that would come in with what I expect to see peak inflation as well. So a little bit of confidence enter the market, but not enough to cause any kind of V-shaped recovery, but enough for markets to think about stabilizing at that current value and maybe accumulating at those current values before going back up slowly and surely. So again, we're not looking for huge, massive, fast turnarounds, but we are looking for entry points of significance with a projection down the line of a year, 2 or 3, and obviously exiting along the way into altcoins when the time is right for alt seasons and stuff like that. So the normal strategies would apply, and this would be square one, where we start at, with a Bitcoin balance in time to alternate and rotate effectively into some significant big gains with altcoins. But at the moment, we're not going to see any of that with altcoins. We're focused primarily on the Bitcoin chart for obvious reasons. So yeah, the daily on Bitcoin doesn't look particularly good, and again, the major areas of supports given to us on the longer term time frames, but even at this stage now, at this 30,000 give or take, it's still what I would consider to be the fair value for what we're looking for risk to reward. You're looking to risk what could be, and we'll just measure this out, if you were to buy at this very moment in time at effectively $30,000, and we came down to these areas of significance. 24 would be a risk of obviously 20%. But let's just say we managed to wick all the way down to 20 or just below at 30%. So you're looking at a risk to reward of what would be about 30% max at this level for buying, to potentially a full-on recovery and then some, which means you're looking to risk 30% to even just 130% to its previous high, and then see where we go from there. Now obviously we're talking a long-term time frame here. You know, last time Bitcoin approached its previous bull market peak, it took quite a while for that to revisit those areas all the way over here. That took about 2.5 years. No, more than that, 3 years for it to reach those levels. And throughout that period, you know, there was a lot of chop in between, but there was a lot of opportunity in between as well. You know, the market was seriously opportunistic around here, not just for Bitcoin is relatively sideways and boring, but throughout this we had several alt seasons, we made hundreds of X's. There's lots of things that can be done. While effectively sitting in a Bitcoin position, things become very obvious and you can make epic trades using that Bitcoin into altcoins. Effectively, it took 3 years for it to approach its previous bull market high. So I'm not suggesting that's going to be the case here. We've not seen a dramatic sell-off to that extent. We know that Bitcoin is pulling back with traditional markets. We know that Bitcoin will accentuate the moves that traditional markets will do, generally speaking. But on an individual basis, you could look at Bitcoin and PayPal, or Bitcoin and Netflix, or Bitcoin and hundreds of other charts, and you would recognize that actually, you know, for us to approach our pre-pandemic lows, which was all the way down here, if we measure it from where we are right now to its pre-pandemic high, that would be a 65% from where we are right now, and its pre-pandemic low would be an 86% retracement from where it is right now. This is why I would say to you all, you know, when you hear people like snub the store of value aspect of Bitcoin, obviously when you see things retraced to these extents at this speeds, you know, the people who live in you know, the goldfish bowl will say it's not a store of value, but the people who live in the ocean recognize it for what it is, which is that of course it would be very unrealistic to expect it to come down to you know, 10,000, the pre-pandemic top, or the pre-pandemic low of 4,000. Very unrealistic. Now obviously anything could happen, but I find it's very unrealistic to imagine that. And so in that sense, would you rather have bought into any kind of traditional market, or would you have bought into Bitcoin? And this is where the store of value comes in, because if you think about what we're looking at here, is that yeah, it's held its value significantly well, even from its pre-pandemic top. That's a 65% retracement to get down to those levels, and an 85% to get back down to those levels. Looks like the store of value story is actually something that could be held onto as true, and I expect it to continue to hold true. The main thing is, if you're in a goldfish bowl, you'll fail to see it. If you're in anything outside of that, you should be able to see what I'm talking about and recognize it based on the chart and based on its projection. So like I say, fair value exists at this exact level. It's not the perfect level. It could easily go down to a tune of 30% or so. But realistically, we're getting divergence on large term time frames, and even though we do expect them to the price to go down to those levels, just based on the way that the economy and major indices look and the sentiment in general will bring price down to those levels, that would be a realistic expectation. But if we imagine that those are the absolute lows, which they very seriously could be and probably will be, then buying even at this level and anywhere below here would give you a good bang for your buck down the line. We would be looking to surf this trend line over the next few years to be making new highs into what would be maybe a 2 to a 3 year period where the gains would be absolutely significant, and the decision that you made, whether it's today or next month or the month after that, because I don't think this is going to turn around quickly, but I think you have plenty of time to get into it, but the gains that you will be seeing down the line would be absolutely significant. So what's 30% between friends? You know what I mean? Here we are at this, like I say, a current fair value, and if we were to continue to trend over a period of a few years, yeah, we are looking for 100,000, 200,000, 300,000. you know, what is your entry point and what is your exit point? Or is it something that you're just going to think to hold on to because of the store of value, which, like I say, is pretty apparent when you zoom right out and you recognize it for what it is. Anyway, I'm going to leave it with you there. It's probably quite a long video, so hopefully I haven't bored you all to death. But if you did listen to all of that, please let me know your thoughts in the comments below. Otherwise, I hope you have a nice day and take it easy.